Hello. How's everyone doing? I'm Andy Serwer. This is Ken Lin, the CEO and co-founder of Credit Karma. And Ken, it's great to see you.
Likewise.
In from the West Coast.
That's right.
Back to the land of Wall Street and the big banks and the old world and the old school.
Yeah, better weather.
Right. Well, sometimes. So why don't, for the sake of some of us who aren't so familiar with what you do, why don't you talk a little bit about Credit Karma? Give us kind of a Credit Karma 101, the model and how it works.
Sure. So Credit Karma was founded a little bit more than 12 years ago with the idea that credit scores are really one of the defining metrics of a consumer's financial health. And as we've grown the business, we realized a few things. I think first is when a consumer's looking for their credit score, they're actually not looking for a 3-digit number. They're actually asking for what products do they qualify for. And I think that was the insight to our business. So when a consumer comes to our site, we're able to give them a score, but more importantly, we're able to analyze all of their liabilities. So today, we probably see somewhere between $5 or $6 trillion worth of consumer debt. We can determine, are you paying too much for that debt? Is that reasonably priced based on your credit profile? And we're able to suggest to somebody who's paying 19% for an auto loan that 19% should really be 12%. You're going to save $175 a month. And it's for the same term. And really, and if the consumer does that, our member does that, then they will save that money. Our banking partners get a new customer. We get a bounty from that, which is our revenue model. And the cycle continues. And as we have continued to build the product, we also realize that consumers are just crying out for help in terms of how do we help them manage their finances? Because as everyone in this room knows, technology has made most consumer products more complicated, not less, and there have been fewer and fewer tools to help digest and understand that notion.
Right. So the business model is lead gen, basically, and is it also a freemium? I mean, can you pay to be a member, or what is that the one source of revenue, or how does that work?
Yeah, it's the only source of revenue,
okay.
and it's actually one of our core principles at Credit Karma is how to make everything free. So we started with credit scores. We added credit monitoring, I think, 7 years ago. We added tax preparation 3 years ago. We added identity monitoring 2 years ago. So the note is we continue to add services, and internally we always say, how do we make this product free? How do we build premium services that other people charge $20 a month, $100 a year for, but how do we make it free at scale? And that's the challenge we give to our product team day in and day out.
And you guys really aren't a startup anymore. I mean, you've been around for, what, a decade?
Yeah, that's right. We've been around for a decade. We have 1,500 employees. We have 100 million members now on the platform. So,
wow. Is that active, or what? How do you characterize that?
Yeah, so when we talk about members, you can only register one time on Credit Karma, so they're all unique. And then from an activity perspective, we look at it in a couple different ways. We look at monthly active, annual active, but I would throw out that in any given week we see about 30 million active on our site, and that number just kind of grows from there based on the duration that you're looking at.
Yeah, how do you keep people active? I mean, isn't it, you could see this sort of being a one and done kind of thing. So how do you sort of, get traction with customers?
Yeah, and I think this is one of the things that people miss is that it goes back to this notion of consumers are really looking for help with their finances. And you think about a credit score, and I think that's actually, by the way, the wrong interpretation of what Credit Karma is as a business, but I'll come back to that later. What people are trying to do is they're trying to understand their money. And what Credit Karma is able to do is give them a quick snapshot of all their accounts in a single place. We're able to give them helpful tips. I mean, we do things like, tell you like, hey, there's $5,000 sitting at the state treasury because some life insurance policy cashed out and they weren't able to find you, right? So I think it's those delightful things that keep people engaged, but it's also that single, simple place of understanding your finances, which is driving the engagement, and I think something that consumers are really looking for.
What's the competitive set like, Ken? Who do you compete against?
I think we compete on a lot of different levels. So I think on one front, when you look at our revenue model and what the banks are doing to find new customers, and I think in that world we compete with Google, we compete with Facebook, we compete with Yahoo, we compete with television stations in terms of eyeballs and viewership and awareness. I think when you talk about the consumer proposition around helping consumers with their finance, I think that's much more limited. I think Experian has a free credit score, and I think on that front, there are a lot of companies that provide the score, But I think there are limited companies that actually provide the insights and really the summation and the idea that we will advocate for the very best option because we think this is what is the right thing for you at any point in time.
Okay, you mentioned Google. I want to talk to you about that in a minute. But before I do that, so how do you measure success? What are some of your KPIs, your OKRs, metrics that you use to measure the business?
Yeah, so I think one is the overall number of members that we have. We think that's an important metric. We think and we know that more and more consumers are confused about their finances, right? I think some of our data says a little bit more than half have great angst around their dollars, can't sleep at night because of their finances, and we think that there is a really big opportunity. So point being that we want to provide all of the services necessary to make that angst go away. So when we talk about credit monitoring, when we talk about tax preparation, when we talk about what's the best loan and the transparency around it and how to get out of debt, we look at it as what services are we building to drive the most amount of users to register on our platform. So that's one KPI, which is just the sheer number. Two is engagement. We think it's really important to keep people engaged around their finances. I think the worst outcome for people is when they stick their heads in the sand and not really focus on what matters. It's one of those things where if you're trying to optimize something, but you don't pay attention to it, you don't have the metrics, you don't have the KPIs on your own financial life, you're not going to do a very good job of getting to the place that you want to be. So we want to be able to provide those services, and engagement tends to be the driver. Then lastly, we think about what we call share of wallet internally, which is, we know that consumers on average will take out 1.1 loans per year. And we think about, well, okay, if that's the case, what percentage of those are we driving? Are we helping them find the right ones? And then lastly, which is more of a qualitative or a measure, which is what type of progress are they making, right? Are members hitting their goals? Are they getting out of debt? Are they saving for retirement? We think that's an important piece, because I think most of the companies, most of the banks actually forget that piece, the human piece and the human element of what we do day in and day out.
One kind of challenge or opportunity in this business is the fact that there's really no limits, right? You can just keep morphing into other parts of the business. I mean, there are regulatory hurdles potentially, like you'd have to become a bank holding company or something like that. So how do you define what you are and where you want to go?
I always say this, so with a lot of users, I feel like there's a lot of opportunities, right? And we've tried to confine it to three key areas on our business. First is on the lending side. So we think a lot about the liability side of the consumer's balance sheet. So that is the credit cards, personal loans, auto loans, mortgages, and student loans. So we think that has to be a core pillar of what we do. Secondarily, we think about the savings side. So that's the planning for retirement, that's the checking, that's the savings accounts. And then lastly, insurance, which tends to be the hedge or the protection of those particular assets. And I always tell the company, just because we have a lot of users, we shouldn't be selling refrigerators and so on, right? And the point being that there's an area that it makes sense for us to operate. There's an area for which our brand stands for something, and that resonates with our members. So we need to stay in those areas.
Can you tell us how fast you're growing, how much revenue you have, and if you're profitable?
I can answer some of those.
Come on, man.
So we're growing very fast. We just crossed 100 million members, and I think that is important for us because, and one of the things that we observe in this space is that because the banks are so large, I feel like consumers don't necessarily have a voice in being able to spur the consumer innovation that I think is necessary in the space. And because we can speak with the voice of 100 million members, I think that actually gets the attention of large financial institutions, which I think is good. So talk a little bit about that one. Our revenues, we don't share, and that's one of the benefits of being a private company, but I think it's some hundreds of millions of dollars, which has been publicized before.
Oh, yeah, I think I saw a number like 370 or something like that.
That was
okay.
A few years ago, many years ago.
Many years ago, okay, good.
And then
it's more now.
It's more now, and then profitability. We have been profitable since 2015. It's just one of those key metrics. I think that if we're going to talk about financial stability, if we're going to help our members become, hit their goals, we should have the same fundamentals and the same financial discipline.
Another number I saw was that you're a 4 or 5x unicorn at this point, reportedly. And of course, I've got to ask you, you're looking to go public anytime soon. There's obviously the IPO cycle's pretty robust right now. Or exit like that on your mind?
Here's the thing. I mean, I think given that we've been running for 12 years, I think there have been multiple opportunities for us to go public. And we always go back to this idea of what is our mission, and we focus on that mission. I always think that the IPO is a tool in reaching your mission rather than the end goal. And I think for some companies, it's the end goal, and that's totally fine. But for us, we think a lot about making investments and doing what we think we can do in the space to make it transformative. We think a lot about the 99% who don't have the access that the 1% do, and how do we actually create services that level the playing field. So long way of saying we aren't thinking about the IPO in the traditional sense, because we think there's a lot more investment. There's things that we can do in tax, there are things that we can do in savings accounts, there are things we can do in insurance that we think will be net beneficial to our members, but also transformative to the industry, and we can do those things better in a private setting today than we can in a public setting.
So no shortage of capital, and Google is an investor, so that's another potential exit. I mean, would Google buy you guys?
I can't speak for Google. I think the reality with Google is that they have so many regulatory and privacy concerns that I think it's hard for them even to move into financial services in general. I mean, I think if you take a look at all of their general acquisitions and areas, I think finance has been the one that I think they're probably most shy away from, because it just brings on another onslaught of regulatory frameworks and compliance frameworks that my sense is a company like them probably don't want.
Particularly now, perhaps.
For sure.
So let's talk about privacy. That's a kind of huge topic right now, and it's a part of what you guys do, or a critical part. I mean, you're gathering information and then essentially, and correct me if I'm wrong, but essentially sharing it to a degree with your commercial partners, right? So how do you protect people's privacy? How do you think about it? How much do you share? I mean, I would imagine this is something that you're very granular about at all times, right?
Yeah, I think this is one of probably the most misunderstood aspects of our business, and probably one of the areas where people presume the most. So we started 12 years ago with this statement that we won't sell, share, rent your data. That is a principle that we have held on to since day one, that we still believe in. So contrary to most people's beliefs, which are wrong, we're not outselling or sharing that information. What we are doing is trying to gather information on a consumer's financial life to give them the best set of advice. And the way that I think about it, so why do you collect all this financial data on a consumer? Well, the reality is, if we're going to help you optimize your financial life and get you to the place that you want to be, you need to know the background. And I use the analogy, if you go to the doctor, they need to know your medical history to give you the best diagnosis, the best prescription. When you're asking us today, what is the best credit card, what is the best mortgage for us? Well, we kind of need to know your income. We need to know how much debt you're in. We need to know, like, what is your DTI to determine what is a safe course of action for you. So we try to do that in a very responsible way. And I love the Spider-Man quote of, with great power comes great responsibility. And I think that that data is the power, and it's incumbent for us as a company to think about it and use it responsibly. It's a great thing to ask from our members to trust us. We've been doing it for 12 years, and it's something that we continue to think about day in and day out. It's an important aspect of who we are, because I think in this space, more than any, without trust, it's really hard to be successful.
But wait, just to be clear, don't you share some data with those commercial partners so that they can provide targeted ads or targeted solutions, to use jargon, isn't there a level of personalization that would speak to a sharing of data?
So the data's not shared, right? So what we do on our platform is one of two things. What we try to do is we try to understand the underwriting model of our partners, right? Mm-hmm. So for all the people in the room who have really complex algorithms that determine eligibility, we actually have a team of data scientists who are actually determining or looking through and figuring out, Bank X is looking for this type of customer, Bank Y is looking for that type of customer, and we'll underwrite. But we actually never share that information.
Oh, so you guys are actually doing the sorting and filing.
That's right. Now, in some cases, some of our partners are actually giving us their requirements.
Right, that's the sharing of their models that they would traditionally maybe keep close to the vest, that they're actually sharing with you guys.
That's right. And we think that's really important, because one of the big frustrations that we see, and one of the stats that we know, is that, for certain segments of the credit population, 80% of applications get declined. If you think about how frustrating that is for a consumer, where you are desperately looking for some level of financing, you apply for a product that has some teaser rate that sounds great, but you're not qualified for. your credit score goes down, and you're still in the same situation where you need that credit and you're worse off. And I think those are challenges that consumers see day in and day out, and I think we miss that sometimes. We're here in New York, our team is in San Francisco, and I think we miss out on the fact that there are a lot of consumers who don't have a great experience, who don't have private bankers, who don't have people throwing great products in front of them, and they're just scraping to get by, and I think that's the opportunity for us.
So you have like 100 million people's credit scores, right? Like
Right.
Donald Trump's credit score? Do you have Donald Trump's credit score?
I don't
What
know
is
if he's a member. I don't know if I'd be allowed to say that.
Really? Oh, well, you wouldn't be allowed to share it, right?
That's right.
Yeah. Okay. I mean, that's a real trove of information. So, but it's not going to be monetized. I mean, you think about monetizing in other ways, but that's again core to what you guys are doing, right? You're not going to do that.
Yeah. Our monetization is actually very straightforward, right? Our monetization is when we help you find a better financial services product. A bank will pay us, and by the way, sometimes a bank won't pay us, and that's okay as well. So we'll have products on our platform that don't create any revenue, and we think about this as a journey. I mean, I threw out the metric on the 1.1 transactions per year, but if you think about that from a life cycle perspective, from the time that you're 18 and you're looking for your first credit product to the time that you're retiring and pulling out of your 401k, I mean, there's a lot of opportunities to help consumers, and large banks spend a lot of money trying to find customers in that solution set, and we think that if we can be the trusted advisor of the member, we will be just fine. The market is plenty big, where we don't have to sell the information, where we don't have to betray trust.
And what about the reputation of the business? I mean, the credit score companies, the credit companies, credit score companies, I should say, have been under fire. There was the freecreditscore.com. People got mad at Ben Stein. I don't know if you guys remember that. Does this business, is the reputation intact or in a good place in terms of consumer trust?
Well, I can't speak for the bureaus, but for us, it's been great and it's been as good as ever has been. I think our metrics say about 90% of our members trust us, and we have a net promoter score in the mid-70s. And we think those things are important, and I think that those are the things that you have to do day in and day out to be successful in this space.
Right, and just a couple other questions about Nodal, right? That was a company that...
Nodal,
excuse me. Said it wrong, Nodal. But who knew? Nodal.
That's right.
That was actually a part of another business, another company, but you peeled that out, right?
Yeah.
How did that work?
So Nodal was a company off of Call Credit.
Yeah.
So Call Credit is one of the major credit bureaus in the UK, and Nodal was the freemium service that we see attached to a lot of bureaus here. And when TransUnion bought Call Credit,
Yeah.
they are more of a B2B company, and for us, we love the direct-to-consumer business. So we bought that aspect, and now we're operating in the UK as well as Canada and the US.
So, okay, I was just going to say, so that's how global you are, those three countries right now. That must be a huge opportunity. Or is it? Is it very hard to do this in other countries?
Yeah, I think what we do is particularly hard, just because the platform itself requires, it's almost a cold start problem in each country. So you have to have a set of banks that generally are always going to be different, right? And their level of sophistication when it comes to technology is very different. The ecosystem by which they operate are very different. So some geographies have bureaus, others don't, and the way those bureaus work are also very different. And then lastly, consumer awareness around financial services product, around financial health and literacy, they vary from country to country, culture to culture.
And quickly, phone support, yes, no?
We have phone support for our tax product, and chat and email support for others.
And that seems to be a good balance in terms of what customers want and cost.
That's right.
Right.
That's right.
Okay. All right. Are you ready for the lightning round of
Oh boy.
overrated, underrated, right? Oh, we're going to get him good, right? We're going to get him good. Okay, ready?
Yeah.
Ken Lin, overrated and underrated. Quick, Equifax. Oh, I knew. Come on, man.
Underrated.
Oh,
I think.
God.
I think. I think
Just
you'll
know
see
one
them
word.
come back.
Ready?
Underrated.
Look at the
All
clock.
right, underrated.
Okay, ready. Amazon.
Underrated.
Lending Tree.
Overrated. Doug, I know you.
Ooh, that was personal.
It was a joke.
It was a joke. Okay, TurboTax. I think
Underrated,
that's it. Okay.
I'll say.
Wow, okay. And lastly, I'm not sure what this was given to me. Auto loans.
How about a shoulder shrug?
Okay, shoulder shrug?
Yeah.
Corvettes.
Oh, overrated.
Okay, all right. All right, on that note, please join me in thanking Ken Lin, CEO of Credit Karma. Thank you very much, Ken. That's awesome.